Have you ever looked at someone's massive fortune and just wondered, how? Well, today we're cracking open the playbook of Grant Cardone. We're talking about his 15 extreme financial rules, the exact unapologetic system he's used for over 45 years to build a net worth of over $600 million. This is not your typical gentle financial advice. This is hardcore. Ready? Let's get into it. $600 million. Just let that number sink in for a second. That's Grant Cardone's approximate net worth. And you know what? He didn't get there by following the advice your parents probably gave you. Forget about just saving your pennies or the old dream of simply owning a home. Cardone's empire was built on a set of really rigid, non-negotiable rules that we're about to break down for you. So what kind of rules actually build that level of wealth? We're not just talking about a few tips here and there. This is a complete financial operating system, something Cardone has been tweaking and perfecting for 45 years. We're going to look at it in 3 key parts. First up, part 1 is the foundation. And for Cardone, that foundation is all about extreme discipline. This part is absolutely non-negotiable. It's about building those internal controls and financial habits that are going to support massive growth later on. Because without this, the whole thing is just a house of cards waiting to fall over. Okay, so this discipline really stands on 4 main pillars. You got to track every single dollar. You have to spend less than you earn. You have to buy absolutely 0 useless things, and you can never, ever gamble your money. Now, that might sound simple, right? But it's the radical way he executes on these ideas that really sets him apart. At the core of Cardone's belief system is this idea that you just can't control what you don't measure. It literally blows his mind that most people have no idea what their exact income is, how much they pay in taxes, or what their real living expenses are. Like he says, if you don't know those numbers, you have absolutely 0 control over your financial life. And here's his practical first step to getting that control back. To find out what you really spend every month, don't guess. He says to add up every single expense you've had for the last 90 days, just like you see in this table, and then divide that total by 3. That number, that's your real number. That's the one you have to get a handle on. And this leads right into his first ironclad rule. If the cash is not physically in your bank account, it doesn't exist. It doesn't matter if you just closed a massive deal and you know the check is coming. Celebrating and spending money you're expecting is a huge wealth-destroying mistake that he sees people make over and over again. All right, so we've laid that foundation of discipline. Now let's get to the really exciting part, the growth engine. For Grant Cardone, this engine runs on one thing and one thing only, cash flow. This slide right here shows you the huge difference between what most people do and what Cardone does. Forget buying a house just to live in it. He says buy property that pays you. Forget buying a car for yourself. Buy an asset that generates cash. Don't just save your money, invest it in cash flow. See the pattern here? So what is cash flow really? It's simple. It's just the money moving in and out of your accounts. Cardone's entire investment strategy boils down to one single question. Does this asset put more money into my pocket every month than it takes out? If the answer is no, he's just not interested, period. Let me give you a classic Cardone example to make this crystal clear. Instead of buying a single-family home that just sucks money out of your account every month, he says to buy a 4-unit apartment building. You live in one of the units for free, and the rent you collect from the other 3 tenants pays for the entire mortgage and probably put some extra cash right in your pocket. Now that is a cash-flowing asset. Okay, this next rule is a real game changer, and it might sound a little extreme. Cardone argues that while you're in your wealth-building phase, if something you're buying isn't tax-deductible, you just shouldn't buy it. A tax-deductible expense is a cost that you can subtract from your income, which lowers the amount of tax you have to pay. For him, every single dollar has to be optimized on the way to the top. So here's how that actually looks in the real world. A $200 personal dinner for 2? Nope, that's not deductible, so he'd say skip it. But what about a $400 business dinner with clients? Yep. That's fully deductible, which makes it a smart expense in his book. It's all about looking at the final net cost to you after you factor in the tax savings. Okay, so you've laid the foundation, you've built the growth engine. Now it's time for part 3, building the fortress. This is all about protecting the wealth you've built from all the different threats that can come along and tear it all down. And these are the enemies at the gate, the cracks that can form in your fortress wall. Things like credit card debt, lending money to friends and family, mixing up your accounts, keeping financial secrets, and even hanging around people with money problems. Cardone has a specific rule to fight every single one of them. When it comes to lending money, especially to friends and family, his advice is, well, it's blunt. Don't do it. As he says, you are not a bank. You're not an ATM. Trying to solve their money problems is only going to drag you down right along with them. Now, this rule might actually surprise you. Cardone says to use credit cards for everything. Why? Because they automatically track every single expense for you. At the end of the year, you get a perfect itemized report for free that makes doing your taxes a breeze. But, and this is a huge but, the catch is you have to pay the balance in full every single month. No exceptions. Cardone is absolutely obsessed with financial clarity. That's why he insists on having completely separate accounts for personal expenses and business expenses. He even says spouses should have separate accounts. Now, this isn't about a lack of trust. It's all about accountability and being able to clearly see financial habits, both the good and the bad. The rule is simple. Never, ever mix them. And believe me, this disciplined approach extends to his kids too. You can forget about allowances. His children have actual employment contracts for their chores and their responsibilities. He pays them a salary, which, by the way, is a tax-deductible expense for his company, and then he teaches them how to pay their taxes and invest the money that's left over. Now, that is a real financial education. So, when you boil it all down, what's the bottom line here? For Grant Cardone, the money game isn't about collecting useless things like flashy watches or expensive cars that just lose value. It's about one thing and one thing only: accumulating assets that produce cash flow. So there you have it, the extreme, the unapologetic, and the undeniably effective financial system of Grant Cardone. These rules are definitely not for the faint of heart, and it leaves a really provocative question for all of us. When you look at your own financial life, which of these rules feels like a discipline you're ready to adopt, and which one feels like a line you would just never cross?